Janet Yellen just arrived in China today in hopes of soothing over some tensions between the US and China. Now, the two countries have been at each other's throats, basically being at economic war with each other through sanctions and executive orders. But to stir the pot, the US is also facing concerning developments from other BRICS nations. And to add to all this, BNY Mellon, an asset manager with over $1 trillion in assets, is preparing for a coming meltdown in the stock market, putting a lot of cash on the side. We'll cover all of this and make sure to head into the markets to keep you updated with everything that's happening. Now, Janet Yellen just touched down in China, where she's going to be here from July 6th to July 9th to basically talk with a lot of the heads of China to basically soothe over some of the tensions that have been going on between the two nations. Now, before she arrived, China recently introduced controls over two metals that are key in chip making and communications, which hurt the United States predominantly, or that's really what it was set out to do. But on the other end, the US has also introduced an executive order that would curb foreign investment to China, covering things such as AI, semiconductors, and quantum computing. So while the two nations haven't been at actual war yet, they've been at proxy wars and economic wars, and tensions continue to heat up. And while Janet Yellen may be going there to soothe tensions, many analysts and many people in general do not think that there's anything that's going to come from these meetings. Now, to basically just touch on how big of a battle this is between the US chip making companies, these are the biggest companies with exposure to China and Hong Kong. As you could see, as we've had this recent rally in the S&P 500, really the NASDAQ, the only things that have propped up the stock market or made the markets look good in the United States is the whole AI boom. Now, with this executive order going through and with a lot of money kind of being funneled out of China through AI, semiconductors, and quantum computing, a lot of these companies are going to take a massive hit. As you could see, some of them have almost half of their investments and exposures linked to China. And so the moment that we start to pull back, a lot of these companies are going to see massive hits, which is also going to take a massive hit on the stock market as well. But it's also important to note that China is also taking jabs at the United States in terms of how they're reacting as well. So obviously, they limited two very important metals being transported over to the United States, which are key in making chip making for AI and telecommunications. On top of that, they're also continuously dumping US treasuries. In a video I made a couple of weeks ago, Janet Yellen was asked, what is the United States going to do if China continuously dumps these US treasuries, and what happens if they dump them all at once? Now, you can see since 2012, China owned over $1.3 trillion in US treasuries. In a span of basically 10 years, they've almost cut that in half to holding just below around like $850 billion in US treasuries. While this is still a lot of money, in just 10 years, they've cut almost 50%, which is a very concerning amount. And as tensions continue to rise and continue to heat up, China has this in their back pocket as they can continuously dump US treasuries, as that's going to affect the markets in a very negative way. And on top of that, on the side, China is also holding reserves of like a lot of gold, and a lot of these BRICS nations are also kind of forming with China in terms of creating, so to say, like a new currency. So things are looking very bad for the United States in terms of that. Now, to add on top of this, China is also looking to make friends outside of the United States, as their president urges supply chains after they curb key metal exports. So they curb those two very important metals, basically to sideline the United States. But then on top of that, the next day, he talks about with many other countries how it's important for them to continuously trade with each other in order to continue to keep pushing advancements and keep their economy strong. And he targets especially Japan, as he wants to continue to do business with them and get on their good side, even though we know that they're a very strong ally of the United States. And with all of this coming out, China's not the only one that's trying to basically sideline the US. I mean, we have OPEC Plus cutting oil once again. And the two main people that are cutting is Saudi Arabia and Russia, which we know to be two BRICS nations, which again are very opposed to the Western civilization, or just the United States to keep it simple. Now you could see that on July 3rd right here, they announced that Saudi Arabia will extend 1 million barrels per day of production cuts through August. Russia will also cut 500,000 barrels per day. And obviously they say they want to stabilize the markets or prop up the prices, but obviously there's a lot of behind the scenes actions and talks that are happening as well. Now you have to ask yourself, are they in talks with each other? Are they weaponizing a lot of this energy resource? Because it comes at a very important time because just as the United States wants to fill their strategic petroleum reserve, which is basically where we have hundreds of millions of barrels on the side just in case of an emergency, this is also when OPEC Plus wants to raise the barrels, because as of right now, they're in between $67 to $70. And since they know the United States is trying to refill their reserve, if they could prop up prices, make it more expensive for the United States to buy these barrels. Is this a coincidence, or is this just very specific timing? I think right now it's the latter. Now, on top of all this tension between the United States, China, and then obviously OPEC Plus probably having some background talk, BNY Mellon is also prepping for a very large downturn or meltdown in the stock market. Now you can see that they've been piling up cash on the side, the most that they have since the internet bubble burst. And they go on to say that during the dot-com crash, a lot of equities looked very overvalued, and the Fed was also hiking rates as well. That was the time when we were probably last actively recommending keeping some powder on the side, which basically they are advising that we keep money on the side just in case, because being in this market is just not a smart move. Now, if we go ahead and take a look at basically the S&P 500 and the federal funds target rate, you can see that all the way back here in the dot-com bubble, they were raising rates all the way into the dot-com crash, and then the federal fund rate target rate basically topped out at 6.5% right around here. Now, if you kind of couple this and come straight down, you could see that this is also when the stock market started to crash during the dot-com era. So they're basically saying that we are in kind of like the same predicament in terms of the stock market as we were here back in 1999 or 2000. Now, this is also very similar to what we saw during the global financial crisis, as obviously during the crash when we bottomed out in terms of interest rates, they started to raise interest rates once again. As soon as they topped out and met their target rate, you could see here, if you come straight down, you could see this is right around the same time that the global financial crisis started to happen. And during all of this, that the stock market continued to fall close to 50 to 60%. Again, we are reaching that same exact predicament where we are raising our federal funds rate. Once we reach our target rate, maybe somewhere around here, maybe 5.5%, maybe even 5.75%. Once we reach that, that's the moment that they're saying that we should start to see a massive decline in the stock market, just like we saw in the dot-com crash and the global financial crisis, as it coincides with when the Fed met their target rate all the way up here. Now, obviously, for a while, we've known that there's been tensions between a lot of these countries and the BRICS nations in the United States and the decoupling of the US dollar. But let's take a step back and just kind of look at the markets. Let's take a look at what Bitcoin is doing, where the prices could be going for that. And currently, it's sitting at a very interesting price. Now, I think this is a very important chart to look at right here. The reason is because Bitcoin, since Friday, June 23rd, it has been consolidating in this zone, right? All the way from the high of 31,400 all the way to right here. So it's kind of been in this like consolidation zone, so to say. But there's some very important things to notice. So right now, I have a very important horizontal line basically at the $31,000 level, which I think is more important on the daily. So I'll kind of get rid of it for now. But as we look at this consolidation zone, it's very important to understand how manipulation works in the markets. As you can see, Bitcoin rallied all the way up to its high right around here at 31,500, let's say, to make numbers easy. And at that point, we started to consolidate. But during that time, we also saw some highs being formed, and then we also saw some lows being formed. Now, during this same time, as we started to consolidate and price started to get a little bit tighter, you could see that there was some market manipulation happening right around here and right around here. Now it's very interesting that how when these highs were formed and these lows were formed in this consolidation zone, within a span of a couple of hours, price wicked below and above to take out short-term retail traders. Now this is to kind of confuse the trend, make people think that we're going to the upside, to the downside, trigger buy stops, trigger sell limits, whatever it may be. But after these highs and lows were taken out, you can see that the market propped up just a little bit once again, kind of surpassing this high over here. And then we kind of bottomed out. And so while a lot of people may think is what they're seeing is that if you take a look at this market, you see kind of like a downturn, a rise up, a fall, a higher high, and then a pullback. And now what a lot of people think is that we're going to move to the upside and break a lot of these highs. But what we're seeing once again, what it looks like is market manipulation happening at its finest. Because if you take a look back here, all the way at these highs, isn't it interesting how market currently has wicked above this previous high and also this previous high? And so what's happening is that while a lot of people think that once we break out of this zone, price is just going to catapult and go to the upside, but what's really happening is the same thing that happened over here, just on a larger time frame and a little bit more time. So what I personally think is going to happen is that when we look at this chart, as a lot of people and a lot of traders have already been wicked out, what's going to happen is that once all that liquidity is taken in the short term and manipulation has occurred, we're going to start to fall back to the downside. Now, if you zoom out on a larger time frame, now when we come back onto the daily time frame, you could see that 31,000 seems to be more of a consistent level. On the shorter time frames, it kind of chops through that price level, but on the daily time frame, you could see that over here we had our first rejection of the high over in April 23rd. Now you could also see that there's a lot of wicks to the upside. Now when you see a lot of wicks to a very strong support or resistance, or basically a ceiling or a floor, that's important because that tells you that market is exhausted at that point. The buyers have tried to push price up and sellers have basically come out on top and have rejected this price. So 31,000 continuously rejects Bitcoin's price and continues to push to the downside. Now you can see obviously on the 2-hour time frame when we were talking about it, there's obviously some market manipulation happening right here. And as a lot of buyers are getting trapped to this upside, once enough money is being trapped, then we could see somewhat of a push down. Now what I personally think is that we can get a push down below these lows. So basically anything below 29,500. But if we go ahead and we take our Fibonacci, which we can also see some very important retracement levels, you can see that 50% would be at 28,000, which I think is also a very important zone because, again, if we take a look left, you could see that there's some important price action happening right over here, and obviously a very important rejection happening at this point before we fell down to these lows. So I think anything personally in between kind of like these zones, I think we could see Bitcoin fall to 28,500 would be ideal. But as we take a look, obviously on the shorter time frames, you know that there's market manipulation happening at this point, and Bitcoin, I personally think, could drop a little bit lower to these levels. And like BNY Mellon was saying, as we take a look into the markets and everything happening on the outside, I think it is important to stack on the side and be ready for any potential drops or massive meltdowns happening in these markets. But until the next video, I'll see you guys then. Peace.